Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Scottie Resources. Scottie Resources is traded on the TSX.V under the ticker SCOT and on the OTCQB under the ticker SCTSF. And I'm joined today with the president of Scottie Resources, Thomas Mumford. And Thomas, it's great to have you back on the show, as always. And your Scottie Gold project in the Golden Triangle of British Columbia, you have had a lot of catalysts this year from economic studies, the biggest drill program you've ever had as a company. You're doing studies on ore sorting. You've had all kinds of things going on. But in the process of all this, you did a bulk sample, and we've kind of been following along with the process as it was blasted and mucked and trucked and shipped. Now we've got the results back in. And so on the 1st of December, to kick off this month, you shared with the market that you generated $9 million Canadian from this bulk sample. It was a successful dry run, basically a trial mining scenario, and it gave you a really good understanding of what it'll look like in a development scenario to do your direct ship ore method, where you basically mine this ore, put it on a barge, ship it to Asia. Ocean Partners, your offtake agreement partner, processes it and you get paid. So walk us through some of the nuance here, some of the details of what you learned from this bulk sample process.
Yeah, absolutely. Thanks for having me on, Chad. So the bulk sample from start to finish is going to be completed within 1 year. So we submitted our first mine permit application to do the bulk sample in January this year. We received that permit in July this year. And within a week or so, we were blasting up at site. So we did two blasts and then we mucked it out, visually identifying what was ore and what wasn't ore. It's a very obvious vein structure that outcrops right at surface, separated it into ore and waste piles, and then we had it crushed with a jaw crusher up at site. We then loaded it into trucks, trucked it down the road to the port of Stewart, where we then went to a gravel quarry and then run it through a cone crusher and then stored it at the warehouse, the bulk shipping facility in Stewart. That's where Brucejack and Redcrest mines, the Newmont mines, both ship their concentrates out of. And so, yeah, we released this news release in early December there and kind of said, this is what turned up. So it ended up running, based on our initial sampling, 15.8 grams per ton in gold and then 42 grams per ton silver in it. And from that 10,000 ton sample, the bulk sample, we were able to generate 4,500 tons of ore from it. And so that was higher than we expected. The vein ended up blowing out as we went deeper on that small pit. And so we were able to recover more ore from that. Yeah. And so it ships out on a ship here in I think about a week's time right now. So we've made this agreement with Ocean Partners. It is excluded from our offtake agreement that we have with Ocean Partners, which is for the main DSO project that Scottie's working towards. But for this bulk sample, yeah, the deal with Ocean Partners is essentially we get paid 90% provisional value of that shipment 5 days after the bill of lading is filed. And then when the shipment crosses the ocean, gets to Taiwan, and they resample it on the other end, then there's a rectification and we receive the final 10% values for that shipment. So yeah, it's a fantastic project for us. And it's just a proof of concept that this DSO can work for Scottie, and a lot of the infrastructure is already in place to do so.
It's a pretty nice deal to get paid 90% up front and then the other 10% once it gets there. So pretty interesting agreement on that bulk sample. Great to see some non-dilutive capital come into the company to help fund future work. And an interesting point is that, like you say, the vein blew out at depth, and so you were able to recover more, and you had a higher grade. I think initially you guys were modeling at somewhere around 10 grams per ton gold, and coming back with 15 plus, almost 16 grams per ton gold. Nice to see. I guess in that sense, could there be more upside surprises in a development scenario like that, where maybe you've been pretty conservative with some of the resource modeling?
Yeah, I think there's that opportunity. Absolutely. I mean, the resource that we've published this year, so we published our first main resource, the spacing of that is in the order of 50 to 60 meters between drill holes. With this bulk sample, we were sampling something basically it was vertically about 15 meters. So, we have a lot of opportunity to show both higher geological confidence by doing this infill drilling, like the work we did this summer, but also showing maybe resource growth as well, or grade improvement on the overall resource by drilling these tighter holes within the structures.
Well, and this kind of brings up the topic of ore sorting. in a roundabout way. You did it manually, you did it visually because it was easy to see what was ore and what was waste. So in a way, you kind of did old school ore sorting. How would the new school ore sorting fit into this as far as, what kind of ore sorting are you contemplating? I know you're looking at feasibility study work on this and you've already done a lot of it. So maybe speak to how, in a rudimentary sense, you did some ore sorting, but how could ore sorting even tweak this further?
Yeah, so up at site this year, we had a woman that works with us. She did her bachelor thesis on the Ben vein. And so we were lucky to have her up at site, and she was just directing the excavator on a bucket by bucket basis. We had dozens of samples that showed the variance in grades, and she had a good context of what it was. But I mean, she ended up doing an absolutely fantastic job. We got more tonnage at a higher grade, like you said, than we were expecting. So that worked extremely well. But yeah, with ore sorting, I mean, it's taking that same process and basically mechanizing it and really using either chemistry, which is in the form of XRF, so X-ray fluorescence, or density, which is XRT. And those two techniques we've been evaluating. So the first ore sorting study we did, which was like a benchtop PEA level study, that suggested that if you pull out 50% of the waste, you only lose about 5% of the gold, so about a 95% recovery. And therefore, you're almost doubling the grade in that process. So that looked really well for us. And that worked equally on an XRF and an XRT basis. The next stage we did was a feasibility level study, which was an 800 kilogram sample that we sent to South Africa, to Rados, and then to SRC in Saskatchewan through a TOMRA machine to do XRT. So now we're getting results back that has gone through two full scale machines, and that'll validate what we saw in the benchtop study. And I assume there's going to be some variation between those two, and that'll really point the direction towards which technology we'll use in the feasibility study and the eventual production scenario.
Well, and let's talk about other things you're doing as far as trade-off studies, other work streams, building towards the feasibility study, and what that pathway looks like. You've already put out to the marketplace this year the PEA. I guess I should also note that on the 8th of December, you did file the PEA officially, and we've talked about that in the past, but maybe give people, Thomas, just a quick snapshot of the key high-level economics, but then what do you think may change as you build towards the feasibility study?
Yeah, so I mean, the high level economics of this, we did the pricing of the project at $2,600 gold. Obviously, we're well above that, and we showed the range up to 4,200 within that release. And then in the actual PEA, I mean, you're looking at a range of after-tax NPV of $215 million all the way up to $670 million at that range of 2,600 to 4,200 for the project. And then we've also shown that, if we didn't do a DSO project, if we didn't ship it to Taiwan, if we were to instead do a toll milling scenario with the premier mill that's just down the road that we drive by on the way to the port, I mean, those values change up to about $150 million more on an NPV basis. So it goes from 380 million all the way up to 830 million on an after-tax NPV basis. So a lot of variance there by going through a toll milling scenario, but also, at current prices, this is a well-valued project and it's quite robust to get going. And the capital cost just to get it started is only about $130 million Canadian to build this thing out. And that's largely a function of the infrastructure is already in place. That road that goes from Scottie all the way down to the port already exists. I mean, we showed that this year with the bulk sample. We had over 100 truckloads go down that road without a hitch, delivering that product down to the port in Stewart. The other thing that we got out of the bulk sample was a lot of technical details for the project, both on a very logistical basis on how to operate up there and kind of the parameters for shipping, but also from like a very mine building structure and focus for the feasibility. So like understanding the comminution properties of the ore body were pretty important to us. So like things like bond crushing work index or the bond rod work index were two big things that we got out of the process of creating this run of mine material at the bend vein, grade to size fraction, and then also the particle size distribution. And those are two important processes when you're dealing with an entirely dry process in a DSO model. So you're crushing, you're running an ore sorter, and then you're separating, and then you're shipping that product. You're not generating any tailings. You don't have any liquefaction. The process is really simple, and the amount of fines produced really impacts on what you're able to sort. So if it's too small, you can't run it through an ore sorter, versus if it's coarser, you can.
Yeah, it's a good point, but also a good point that you don't have to have the tailings and the mill on site and you can crush it, grind it, ship it, and then they process it. So a lot of advantages there as far as the lower capex. As far
Hmm.
as the exploration side of things and the infill drilling you did this year, maybe talk about how that will build into, I'm assuming, an updated resource in the next year or so, and then also a focus on, in addition to jumping categories from inferred to indicated, also still making some new discoveries. You did make the Wolf discovery this year. When I talked to Brad last time, we were talking about the P zone, and just, that's a discovery that the Scottie team has made and continue to build on. So, anything on the building of resources that you want to talk about, or anything as far as some of the blue sky upside on the exploration?
Yeah, I mean, we just closed the financing as well. So we are fully funded for next year to go through feasibility and to do an exploration drill program next year. So we've got, with this 9 million coming in, we're going to have over $35 million. We are going to deliver the largest drill program we've ever done. What that'll be will be the completion of the infill drill program. So we'll convert the rest of the resource from inferred to indicated. And then we're going to have a significant component of exploration. The main targets that we're driving towards on an exploration basis would be going deeper at Blueberry, showing that, mineralization extends well beneath the 525-meter depth, which is the deepest hole we've drilled on the structure. And then we're looking at C and D zones as well, expanding those. We're looking going out to Domino as well. And right now we're waiting on drill holes from the Wolf Zone that you mentioned. So we did drill that this year. We drilled 3 or 4 holes off of that pad and stepped out on that structure. So we're pretty excited to get those results in and be able to report those to the market as well.
Yeah, so a good financial position to be going into 2026, ready to rock and roll with the biggest exploration program that you've done. You'll finish the conversion. Do you have a rough timeline on a resource update?
I think the next resource update is going to come out with our feasibility study in early 2027. So I don't think you see a market released resource this spring. It'll be the following year when we release the feasibility study with that newly remodeled resource.
Okay, appreciate you putting some color on that. So basically, it'll come out in tandem with the feasibility study. And then maybe just one more comment on, you have such high confidence in all the work you're doing, and it's at such a high caliber that you're actually piggybacking over the PFS and going right to the FS. Maybe for people that have any concerns or reservations about that, explain why.
Yeah, the when we broke down the timeline to get into production and stepped it back, we realized that a pre-feasibility wasn't really needed in this project. The engineering components of it are actually quite small because you're not building the tailings facility, you're not building the mill, you're using a lot of pre-existing modular equipment to build out the project. The big engineering work needs to happen is geotechnical work on the pits and the underground development, and then the engineering design of the underground. And so that we started at a PEA at an enhanced level. So we collected geotechnical data while doing the PEA at a feasibility level. So we kind of got a head start on that. And when we broke down the timeline of how long it would take to go from PEA to pre-feasibility to feasibility, it was the pre-feasibility that was actually holding back the development of the project. And given the simplicity and the time value of money of getting this into production as quick as we can, that's where we felt that confidence. And I think it's been reaffirmed largely from this bulk sample. We've shown now that from permit to production and sale within a year, it can happen. I mean, the ore body held together, grades were even higher than expected. And I mean, it's obviously revenue positive. And our PEA was at a $2,600 gold, and we sold our bulk sample here just a few weeks ago at $4,100 gold. So I think there's a strong justification for the jump over pre-feasibility to feasibility.
Yeah, and those higher metals prices make it that much more advantageous to get the ball rolling and get the ore processing. So nice to see a successful bulk sample overall. The tail end of it's being completed here. You'll get that final 10%, but nice to see the proof of concept, higher grades than expected. Maybe some upside surprises still to come from the mineralization when you actually get into development, like you say, because there's 50, 60-meter spacing. So when you dial it in, maybe some more higher grade areas than people even realize or even have factored in, and a lot of catalyst on
Mhm.
tap over the next year. Anything else you want to leave us with, Thomas? Any other final thoughts here?
No, I mean, we're going to have a strong start to the winter. We're still got over 50% of our drill results to release. So I think you're going to see strong news flow into the early winter with us. And then you're going to see a clear plan on what we're going to do next year coming out subsequent to that.
All right, well, we'll wrap it up there. And for those of you listening in, if you want to follow along with all those drill results when they get released, definitely click on the link below down in the show notes. It takes you right over to the Scottie Resources website, straight to their news section, where you can sign up for updates that hit your email inbox or just follow along with the assays as they get reported. We'll definitely have a lot of conversations in the year to come. This may be the last one for this year, but as always, Thomas, looking forward to our next conversation.
Thanks, Chad.